first talk about the house and land packages in your backyard, right? Now I'm already into this game, how to purchase, where to purchase. I'm hearing a lot of news, a lot of stories that came by different professionals. For example, I was talking to a mortgage broker 2 days back. And what he told me really shocked me. There was a builder developer reached out to him saying, "Hey, you are a mortgage broker. You have a lot of clients. You have books. So whenever someone comes to you for probably doing a pre-approval or assessment of their situation, why don't you refer those clients to our house and land packages? You will get a 30,000 commission dollars. 30,000. Imagine $30,000 on 600,000 property. So they're already putting in all that money when they're actually selling that property to you, right? It's already the money is made by the builder, the seller, the whoever is referring. So that's already bubbled up into the price. So whatever the capital growth that you could probably see in the next couple of years is already gone.
Hi everyone, my name is PK and here I have Reddy, who is a client of the Property Investment Accelerator. He's bought through three properties recently with a total portfolio value now of $2.2 million. He's looking to buy again pretty soon in Victoria. He's a business analyst working for a bank. He's based in Melbourne. And in this episode, I thought we would talk about not just how amazing his journey has been, because I feel like I do that a lot. But we're going to identify both the wins and the challenges that he's experienced. It's really the right mindset and consistency that's allowed Reddy to get to where he is. And of course, he's not at the end of his journey. He's probably still at the beginning or middle part of the journey. So this is some raw, I would say, thoughts from someone who's in the thick of it. It's not like he's retired. He's with all of you who are watching or listening on the journey together. And hopefully you can learn a bunch from him when it comes to things like buying interstate, overcoming all the noise that's constantly surrounding us on whether to buy, what to buy, should we become an investor or not, how to do due diligence, how to buy in a hot market, etc., etc. So we'll cover a lot of things that's totally unscripted. So let's see where it goes. But like I said before we hit record, Reddy, congratulations on your portfolio so far. And yeah, I'm really happy for you.
Thanks, PK. Thanks for the introduction and happy to be on your podcast.
All right. Well, let's just start from the beginning. It doesn't have to be like sequential or anything, but I am curious and I always ask the question, like, how did you get into property in the first place?
Uh, in Australia, probably in 2019, that's when I bought my our first place of residence. But property probably got into my head when I was in plus two back in the days,
Oh,
11th standard, 12th standard, because I have a very close friend of mine. His name is AK, kind of resonates with your name, PK. They have got a real estate business, and we were just in the college days. During that time, what caught my attention was my friend's dad was doing real estate. He is actually taking acreages and then subdividing them into lots and then trying to make um, a society or an estate out of it. So we were just going for fun, and then all the aspects of that development actually caught my attention. And from that time onwards, real estate was in my head, and I was with the flow of things when your studies are happening. You never know what you want to do. So we just went with the flow, finished our bachelor's degree, and then took the job that came through. But always real estate was at the back of my head. So always following properties, very keen, following developments, very keen, even though I'm doing my day job. We came to Australia in 2016. I was here in 2011 very briefly. Then I found what Melbourne could offer, and then we permanently moved to Australia in 2016. Then we lived a couple of years in the city when we were still young, had got time in our hand to enjoy. Then slowly we wanted to move a little bit more away from the hustle and bustle when we had our first child, and then that's when we started looking at buying our own place of residence. 2019 was when I bought my first property. That was our principal place of residence. I just did it. Looking back now, I think we did take a lot of risk buying that property because I'll tell you, I attended inspection every weekend. There was a campaign for 3 weeks, 3 to 4 weeks. The property was going under auction, but I didn't know what due diligence to be done. So for me, it was just like looking at the property, whether it is livable, good in condition, looking new. And one thing I thought about was the schools. Schools were okay in this location, but other due diligence at property level itself, I didn't do much. Like I bought the property in auction without even doing building and pest inspection. Imagine that. That's when my first property journey started in Australia back in 2019. And then we got very busy with life, trying to settle down in Australia and then hustle bustle with the jobs changing, kids happened, parents came. So I couldn't really put my head into investment sort of thing. Then I think back in 2022, 2023, when COVID hit, there's a bit of time in your hand when you are not actually traveling to work. Then I took it a little bit serious. Okay, everything can be temporary, jobs, anything. And then I think you have to create some sort of wealth at the back of your head. And Reddy, real estate is your passion. So why don't you start investing something into that industry and then see if it can create a secondary income, if not replacing the whole income, but secondary income, or at least if it could replace one of our incomes. So we both work. So if it could at least replace one of our incomes, then we'll have more time for kids, more time for life. So that's what I thought. And then, yeah, got into thinking of investing in Australian real estate from 2023, that sort of timeline. And then 2024, I came across your course, registered, I think in the month of March or something. Then, yeah, then I realized what mistakes I made when I bought my purchase, some of them. Um, Even though it clicked well, the property that I bought is in a good location, still growing pretty strong. I just got lucky, but there can be a lot of people who may not be as lucky as me. So it is really important to get that sort of education side of things whenever you're doing something, especially when you're trying to put your hard-earned money into a 600K or 500K worth of property. Obviously, you want to make sure that you don't incur losses there. So sorry, I'm taking a long, but that was the sequence of events that happened. And 2024, after I signed up your course, that's when I started taking buying properties seriously, and also interstate. I had no clue how to buy interstate. Of course, the only thing that I could do is I always wanted to visit the property and location and see the whereabouts, go through the area and then understand the property aspects of it. Then probably I would get enough confidence. But I think your course kind of taught us enough that you can still do it remote. That's probably a biggest win on you, PK, designing that way. And you were able to do it. You were able to teach a lot of people as well. So that is one of the biggest ticks for me as well, from your course. So 2024, I started looking into Perth market. I know was probably a little bit late, but then there was still a lot of steam left in Western Australia market back in those days. Probably it has done 30-40% growth. I still wanted to take that board because fundamentally Western Australia has got a lot of housing crisis, because it didn't grow as much as major other cities like Sydney, Melbourne, or whatever. So basics are still ticking. So 30% growth finished. No need to worry because I know that market will still grow for a bit of time. So I acted very quickly and started looking into the market. And somewhere in the time of July, August, I closed a deal in Eton, in the Bunbury region. Then in 4 or 5 months of time again, I bought another property in Mariba for myself. That's on the coastal side of Perth on the north side. So yeah, 2024, we bought two properties for ourselves and helped a couple of friends. 2025, again, I'm planning to buy one or two more properties, one at least in Victoria, and then probably something with more cash flow. I'm starting to think on the commercial side as well. Yeah, but that's the plan forward.
Right, right. And I think the great thing as well, I mean, there's so much to unpack there, but the one great thing is that sometimes people, I remember in 2023, people thought that, oh, I've missed the property boom. You know, the property boom was 2021. And then in 2024, people thought, and you kind of alluded to it as well, that, oh, I missed the property boom. But yet, you know, I think your Eaton one grew $75,000 in just 8 months. Your Mariwa one grew 45,000 in the first 3 months. So, I'm seeing like over the years, I'm triangulating and I'm seeing that regardless of what year you buy, as long as you know where to buy and how to buy, you know, using data, it's not unusual to be buying or to be making rather $10,000 a month in at least the short term, you know, the first year or maybe 2 years by timing the market. And then, of course, it's not going to carry on like that forever. I think that's wishful thinking. But as long as that your gains are front loaded, of course, you're not sacrificing those longer term data principles, but then that longer term growth happens on higher short term growth and you get superior long term outperformance as well. So, you know, I picked up on that point that you said, oh, that I sort of maybe caught the Perth boom a little bit late, but it's all relative in the context of things. And now, of course, you're looking in Victoria, which is the regional Victoria parts of Melbourne are really well placed, and as you know, they're incredibly hot. And regardless of the fact that Melbourne is not booming, regardless of the fact that land taxes, yes, they exist in Victoria, anyone just has to try buying a place like Bendigo, some places in Bendigo, to see just how hot the market is. But Reddy, I just want to pause and I just want to rewind a bit because I think you're in a very unique position to be able to answer one question for a lot of people. And that is, you know, a lot of people who watch my content are from the subcontinent, you know, India or thereabouts. And they may have some experience in Indian real estate, just like you have, I think, an apartment in somewhere in India. And when they come to Australia, they feel, at least this is my speculation, they feel that Australian investing is much like Indian investing, i.e., maybe buy an off-the-plan apartment or buy a brand new place and then just kind of, I don't know, that's probably how investing works in India. But could you maybe share your thoughts on how in investing in India, real estate investing is different from Australia, so that a lot of folks who are recent immigrants don't make the mistakes that, you know, are easy to make.
Yeah, sure. Before I get into the mistakes part, I'll probably first talk about advantages of investing in Australia because um, you buy properties in India. Probably I might use Indian language here. Maybe an apartment 80 lakhs in Indian currency, you hardly get rentals about 15,000 rupees per month, 20,000 rupees per month. That doesn't even cover your EMI. Your EMI is sitting somewhere around 60,000, 70,000 rupees, Indian rupees. But what you're getting is like about 20,000 Indian rupees. So your investments sometimes there don't stack up in terms of cash flow a lot of the times. But capital growth could still happen when you have a piece of land in a very niche pocket because there's not much land supply there. That is, you will still get capital growth, but you won't have cash flow. So every time you have to pump in the money into your Indian investment properties. For people who are into the very early stages of their investment journey, that may not work a lot of the times because you keep spending $1,000 every month to just cover your EMIs there because the rentals are not covering.
Mhm.
Coming back to Australia, most of the times, if you go like 20% deposit, sometimes even 15%, depending on how your rental yield there in a particular area, interest rates at that point in time, most of the time, 70 to 80% of your EMI is paid by the rental income here, which is a very, very opportunistic thing here in Australia, where you don't have much load on you. When you actually buy an investment property, your rents cover for it. That is the latest advantage that you have in Australian real estate market, especially when it is residential properties which are in good areas where the vacancy rates are low. You always get a tenant in couple of weeks to a month in time at max. So your out-of-pocket expenses are very less compared to investing in in India versus Australia. To answer your question in terms of how difficult or how complex it is to buy something in India versus in Australia is you have a lot of data here sitting in Australia. And there is a very systematic approach for buying and selling the things here. So a lot of the transactions are captured into data platforms. Whereas it is very, very difficult in India to find something of that sort. You're sitting in front of your desk and trying to find a location where you want to go or a property what you want to buy. It's very, 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 very difficult in India unless you have people on the ground who know the nitty-gritties of that area or that location and what is coming in that location, all sorts of things. And it's very hard to find a piece of land for yourself. Most of the sales in India are apartments, off the plan townhouses or villas. They're all built in acreages of lands, and then you have a lot of lots getting into built into houses. That sort of scenario is one villas, and another part is high-rise apartments. Um, that's a lot of money is already went in when you are actually buying off the plan apartment, and you get usually emotionally attached to do a lot of upgrades into that house, and you put in a
Yeah.
lot of money, pumping in a lot of money,
Yeah.
but then your returns are very, very low.
Hmm.
But when you come back to Australia, the data is already laid down there if you know how to use it. And there is a consistent approach of selling and buying. Everything is set in standard here. You get minimum information that you need on a particular property or a particular location, and you can rely on that data and you can make very, very informed decisions. And everything kind of goes very smoothly here in terms of registration, or getting the title changed onto your name, whereas it is a very complex process back in India. I'm not saying it is for a normal day-to-day investor, it is very
Yeah.
complex. People who are in the thick of the game, they can do it very easily. That's when you need a lot of professionals help there. Your brokers, there are brokers who charge on both sides. Those sort of things, you have to get in touch with the broker, and then they'll present you a property. They'll look for the properties for you, but then they take commission out of you. Whereas in Australia, all the data is already there. You can go to realestate.com.au or domain.com.au. You can find all the aspects. You can look at all the properties by yourself, all the locations by yourself, and you are able to make inquiries, uh, get the property reports, get the videos, or even visit the properties, and then you are able to securely purchase the property without any risk in your head.
Right.
When I say times back in India, you could have a situation where you bought a property, but that property is already registered to someone else. So you get into the legalities of the situation there. Um, but here it is pretty straightforward. Like, but you need to know how to buy. But it's not hard. That's what I'm trying to say.
Can you walk me through how you built your confidence to buy in WA? You know, you're based in Victoria, you bought in WA, you didn't catch any flights, and you're able to trust people there on the ground, property managers, building and pest inspectors to do a lot of the due diligence, the qualitative due diligence for you, but you relied on quantitative due diligence to identify the location. Can you share with me how that process was like? Was it difficult? Was there elements that you found challenging buying, like thousands of kilometers away? I'm asking the question because just like you mentioned over in India, there will be new migrants here, or maybe not even new migrants, just like normal people that are like, I can only buy in my backyard. Like I live in Melbourne, and I know that there's new house and land packages being built in Western Melbourne, out near Melton. Let me just buy there. Why should I consider Perth, or why should I consider Queensland, or this and that? Can you share how you built your confidence and how you use the data to do so?
First, talk about the house and land packages in your backyard, right? Now I'm already into this game, how to purchase, where to purchase. I'm hearing a lot of news, a lot of stories that came by different professionals. For example, I was talking to a mortgage broker 2 days back. And what he told me really shocked me. There was a builder developer reached out to him saying, hey, you are a mortgage broker, you have a lot of clients, you have books. So whenever someone comes to you, for probably doing a pre-approval or assessment of their situation. Why don't you refer those clients to our house and land packages? You will get a 30,000 commission dollars. 30,000, imagine $30,000 on 600,000 property. So they're already putting in all that money when they're actually selling that property to you, right? It's already the money is made by the builder, the seller, the whoever is referring. So that's already bubbled up into the price. So whatever the capital growth that you could probably see in the next couple of years is already gone. A big no-no for me in terms of house and land packages, unless you are getting a land, untitled land like 2 3 years back, and then you with your own builder, you working with, you are probably building it probably for your principal place of residence, or you're seeing some capital growth happening in those 2 3 years with the land itself if there is a severe crunch of land supply, which usually don't happen, because nominees title registrations will happen later on when you have a big piece of land to be sold. When it is already tight knitted pocket, you don't actually get those kind of options. You buy a land and then you have to register and then you have to start building. So that when you will lose a lot of money to all these commissions in between when you actually go for house and land packages. So my preference is to go buy an established property based on the data. So coming back to your question on how I'm able to confidently buy in interstate, like Western Australia, I think a lot of credit goes to your course as well in terms of identifying those locations. Um, the basic fundamentals of economics is demand supply imbalance or balance, right? So when you have a lot of demand, but you have less supply, the commodity price is always high. That's how people control the release of a lot of products. Let's say Apple phones. Why there's so much price tag attached to Apple phone? There's a lot of demand for Apple phones, but their supply is limited, and they only drip feed that. They make people wait and then release it, and then that's how they become multi-billion brands. So the demand supply is one big thing that you need to really um, go to the depth of it and then understand where there is the imbalance. And I think some of your course content teaches that how do we identify those locations where there is that imbalance. There's a lot of demand. People are coming in. People want to buy in. People want to rent in, but there is not enough houses there, especially with the population growth, the immigration coming in, all of that. Western Australia, I saw the trends happening, the population growth that was happening in Western Australia back in those days when I bought them. And there was a huge sudden spike when COVID lockdown finished and people started moving into Australia. Western Australia, in terms of housing supply, has already got shortage.
Mm.
And with the limited amount of more demand coming into the market when the supply is too low, that actually builds up that imbalance to a greater extent. That's how the market grew so much in a short span of time. When I bought in interstate, that was still ticking the boxes. The population was growth was still happening continuously. Immigrants were still coming continuously. There was no supply of the houses. People need to live somewhere, right? So whatever house that you have, when people are visiting for the rental properties, there was one house and the 20 groups coming to secure that property for them to live in. Same thing was happening with the sales as well. So that box is still ticked when I'm in Western Australia, buying my first property and second property. Coming to the confidence, how I'm able to do that. Some of the course content teaches how to best use some of the professionals on the ground. Like I made use of real estate agents, build connections with the sales agents, and also build connections with property managers down there who can do everything for you when you actually approach appropriately, understanding how to do all those steps. So sitting here, I'm able to get all that information. Only thing that won't happen is you just getting into the property, but otherwise everything else is ticked, everything else is checked. Numbers are stacking. Investment is more about numbers rather than being emotional or rather than trying to get attached to a particular house. For me,
Mm.
the numbers were stacking up. I'm buying for this purchase. This is my rental yield. What is my out of pocket at the end of the year? Am I able to afford that? Is the house in good condition? Have I done all the due diligence in terms of suburb checks, in terms of demand supply imbalance, in terms of vacancy rates? And is the house in a good pocket? Are there any red flags? Is there any public housing? All those checks are done. Western Australia was okay. There were not many floods in the areas that I bought, so it was easy in terms of flood checks and all of that. But otherwise, is the pocket good? There are suburbs that come up in the shortlist, but then you have to again understand the pockets of the suburb. So that intelligence will come through the ground level agents and looking at past sales, past rentals, all of that. So all of that I was able to do from the desktop. And anywhere I had a question, only thing I had to do is call someone who is local, who is willing to help. You will be surprised how many people would love to help you. You might be thinking, oh, why am I giving a random call? And what would they think if you just give a random call and ask them a question? Always, at least with the property managers, we can always say that, hey, I'm planning to buy this property, and if everything goes smooth, you can actually handle my property. So I need all of this information. Are you able to give me that information? Can you give me some ground realities? So they'll happily share all that information. For them, it's business, and at the same time, they also have care for other investors. So they share the information that is right on top of their head. They won't do investigations for you, but they're already on the ground, so they have a lot of information about the locality and everything. So they can give you all that information pretty quickly. So it's a no cost thing for them, and they'll share all that information. With all the information that you have from your desktop and from the ground, you will have enough confidence to buy. Only thing, probably I want to convey to audience is doing it very consistently, very persistently is the key to win a deal, because you enter a market, you try and lock some of the deals, but then you get no's, you get rejections. Okay, the property is sold for other price, you are low on the offer price. So you get these kind of rejections, but then you already started understanding the market by then. You have to go hard when you actually understood the market, when you actually understood what offer will get you the property. Sometimes you feel like, oh, okay, I was there for some time. Property moved, the market moved. Be persistent until the time you lock the deal. So taking that action, being persistent is very, very critical.
No, that's great advice. And I just want to highlight as well that, I think a lot of people thought that Perth was a mining town or WA was largely driven by mining. And of course, the mining industry does play a big role in the future of WA's economy. But the reality is, like, even right now, Western Australia holds, I think it's less than 620 titled lots for sale. And you compare that to how many were sold last year when supply was already tight, it was 11,200. So there's just 620 for sale this year
Yeah.
versus more than 11,000 sold last year. So that shows how, of course, like I said at the start, property markets can't grow at double digits forever, yearly growth rate of double digits forever. But right now, we're just not seeing any indication that the WA market is going to fall or even soften out. In other words, go down to a very small growth rate of 1, 2, 3, 4% per annum. And I think this is the beauty of, as you've very well explained it, you gain or you collect data, you process it in a systematic um, way without just memorizing it, but truly understanding it. And then it's not just about getting the sugar hit of $70,000 equity in 7 months or $100,000 in 12 months, but that needs to be sustainable. And I think Perth has been one of the best markets that have demonstrated that. And persistence, right? A lot of people tried to buy in the Perth market, but maybe they weren't persistent enough. They thought, let me get a 20% bargain when in the hot market. It's just good to get your foot into the door because a month in you'd have made 10, $15,000 already. So consistency and persistence is really the key as you've rightly said. Conscious of time, Reddy, I just asked one more question. $2.2 million portfolio, three properties you have. You're doing well. You're not stopping anytime soon. What's your advice to someone who's watching or listening right now and they're like, I don't know, like the market's gone up so much. How can it continue to go up? There's so much uncertainty in the Middle East. The economy is not that great, cost of living, blah, blah, blah. There's so much noise. What would advice would you give to a brand new investor? Should they buy or should they not buy? Or how do they overcome that noise that paralyzes them into inaction?
I think in Australia, if you if you're trying to establish yourself in Australia, one of the great opportunities that you have in this country is real estate. That is done and dusted. Like you don't have many avenues where you can actually have safe investments. I think Australian real estate market is pretty good from that sense. You always have that leverage of the banks, right? So you don't have to put all the, for example, you are buying a 600,000 property. Compare stocks versus property, right? Let's say you have 100,000 in cash. You want to invest somewhere. If you put it into the stocks, what returns that you get is 10% back of that 100,000. Let's say even in an aggressive portfolio, you're
Yeah.
getting 20%, right? But you're getting 20% back on 100,000, right? But whereas in the real estate market, you are actually leveraged by the bank's money. You put your 100,000, but bank gives you 500,000. If property is making 10% or 7% compound growth, what you're earning here is on 600,000. If even if it is making 10% for 600,000, it's 60,000 per year versus 20% in stocks is 20,000 of 100K. So 20,000 versus 60. There is a huge leverage that you're taking from the banks. So definitely look into the real estate market, look into the property market. As I previously said, a lot of your EMIs are covered by the rental income that comes through your properties. So you won't have much out-of-pocket expenses as well, as long as you buy right property where all these data metrics stack up. So definitely take property investing as one of your investments to make you more comfortable, more secured with your life. And probably at the end of maybe 7 years, 8 years, you might have a portfolio where you are able to keep some and sell off some, settle some, start getting some passive income, probably will add to your regular income and also may be able to replace your regular income, and then you have freedom of that life. So definitely invest into the property. But when you are actually investing, start from the scratch, start from the basics. Some people just buy something because there's a lot of noise, someone is coming to them and just selling a property, and then you're just getting straight into the deal and then buying it. Start from the basics. First, yourself educated more on how to invest, where to invest, what are all the aspects that you need to cover, and start understanding your finances. Put a right structure into your finances and understand your borrowing ability. There are a lot of ways that you can buy a property. You can buy it on your own name, or you can buy it on your company, your trust. Try and understand what works well for you with your financial situation and your circumstances. Do you want to start in a trust? I know you have a lot of other podcasts which talk about differences between investing in personal name versus trust name. I would encourage people to watch those episodes as well. But then you really understand what works for you. If you have a very limited borrowing capacity, you might want to start something that could reserve your borrowing for your next purchase. So you might want to go into a trust structure. But if you're someone with big income stream, or you have big borrowing capacity, then maybe a couple of properties that you can buy on your own name, and then you can go to a trust structure depending on your appetite. So have that basics established even before you start investing. Where do you want to go? How do you want to invest? Have There are a lot of accountant mortgage brokers who can help you with that. They don't charge much. Mortgage brokers won't charge you when, as long as you're going with them for the pre-approval. So they can look at your portfolio and understand, hey, this is your income, this is your surplus every year. So this much you can borrow. So depending on your ability, this is what you can do. So get that established rock solid. So that is very, very important. If you are someone who wants to keep growing your portfolio, you don't want to get stuck. So I helped one of the friends who actually got stuck. He bought his PPR, obviously in their own name. Not very obvious, but that is very general tendency, right? You buy it on your own name. And then he bought another investment property on their own name, the joint account. But then they're stuck now.
Right, right. I really like your answers, Reddy. They're very articulate and they're very thoughtful. It reminds me of when you play soccer, at least good soccer teams, it's the midfield plays with the back line and they pass the ball around They try to look for some openings. They try to open up the opposition. Sometimes they'll pass the ball around for like 5 minutes with, before even trying to attack. But then when they do attack, they've already sussed out the opposition and they put in the through ball, and then, the winger or the striker, he runs through and then he slots it home. It's a goal. So property investing is like that. Don't try to just rush out because the market is booming or your friend's already made like $1 million or whatever the case is. Don't just go out and try to sign a contract as fast as you can. Okay, fine. Maybe you'll miss out on $10,000 of equity, but get your ducks in order, get your education done right, get your strategy right. Like you said, not just strategy doesn't mean location selection. It means things like portfolio planning, long term, short term. It means things like structuring, which entity am I buying in? How do I cut up my borrowing capacity? Pass the ball around, try to understand what your moves are going to be, what your blueprint is going to be. And so then when you do, start picking up the phone, you put those through balls through, then you'll land those deals, you'll shoot those goals and actually score. So thank you so much, Reddy. I think you probably have so much more advice to give to everyone, but we're probably run out of time. I just want to thank you a lot for coming on and sharing your wisdom. You've got a few runs on the board. I'm sure many more to come. You're helping a couple of your friends as well, which I think is really cool. And I'm really looking forward to how your portfolio evolves with time. Thank you so much. And thank you everyone for watching and listening. I really try to bring the best content that I can for you and try to bring these sort of real, authentic, and raw stories from my clients to you. There's more than 200 client interviews on the client results playlist on YouTube. Like I always say, I honestly don't mind if you do the course or not, but please go and watch or listen to those interviews with amazing people like Reddy, because you'll learn so much. And from that learning, you'll be inspired to take action. And your future self in 1 year, 5 years, 10 years will thank you for it, because real estate is really magic in Australia, and it changes lives. My name's PK. Share this, hit the subscribe button, give it a like, and thank you once again very much, Reddy.